Okay, if anyone can all right, just to make sure we're going okay. Okay, boom. See who's there, who is running okay. G'day, Nick. Scott, hi, mate. So what I was doing, I just started streaming. I pressed the start button. I couldn't figure out why it was taking so long to come up. It was streaming to the wrong spot. G'day, Jason. So I got my little fella. He's now calling himself a YouTuber. Little boy, he's loving it. So he's just playing some games. He thinks he's pretty good. So we've got a little stream going, and I send it out for him. Problem is, it was I was streaming to his little YouTube what do you call it, site. So he'd have a trading thing on there. His first trading stream. Sorry about that, guys. We're all up and running now. So I'll just get that up. So welcome to TradeSetup. I hope we're all doing well. Today, market's actually holding up okay at this stage. I was concerned it was going to be a bit of a sell-off on the open, but I've been playing around on the Dow and the Hang Seng this morning when they opened. So the Hang Seng opens at about an hour ago, 11:15 Sydney time. I got a good long off there, but it was pretty much covering a few crusty trades from shorting on the Dow, which a couple made some money, a couple didn't. So made it back on the Hang Seng. It kept going. So it's finding a bit of strength, but that was the Hang Seng finding some strength into some numbers that were out at 12 o'clock. And then the US wasn't really going with it. It was trying to break, but it was kept getting capped. And I think now you'll see that it's just finding a bit of selling pressure. I was about to go short, just opening up on them, but it hasn't really gone anywhere. It could sell off still. So I'm still a bit concerned that this market may get hit around a bit. We'll just have to wait and see what happens in the European Open at 4 o'clock. So we'll go through a few charts to start with. Major markets, it's just the usual stuff. We've been looking at oil, we've been looking at gold, we've been looking at Aussie dollar, the US dollar. All these things are linked, and if they all start doing the same thing, then we've got to either be concerned or happy that we're bullish, or concerned that we are bullish and it's heading south. So I want to keep an eye on a few different markets. Copper's another one. So copper's had a good run. Popped through resistance, has backed off. Now it seems to be consolidating below, so we'll have a look at that too. Now, if that's consolidating below, it may not be a good sign, which means that at least the copper market or traders are not thinking that, short term we could come under some pressure. Equity markets to take a look at. Gold backed off, so we'll have a look at that. Look at the gold index too. So we'll look at Aussie gold. So anyone that's trading the Aussie gold stocks, if the Aussie starts to take off because there's a bit of a short squeeze, starts just the reverse of what I said then. If it starts to drop like a stone, a long squeeze, I'm talking about the US dollar has a short squeeze, US dollar rallies, Aussie falls, then Aussie gold may benefit. It'd be interesting to see what happens, because I know when there's a fear driving the market, even things like that, if Aussie gold's going up, it may still be hard for traders to hold on to some gold stocks on the ASX. We'll have a look. So what I want to just go over quickly, remember we've got our website we've been playing around on. Take a look at that, tradesetup.com.au. Been putting up some resources. So if there's anything you might want to see, I've got to add to it. I haven't added to it for a little while. There's just a lot of bits and pieces on there, and we're still looking to get up a button where you can subscribe to our newsletters and anything that we post out. Well, we post out, not really post, but email out anyway. So that's all on there. Feel free to play around there, and just don't forget that if you're new, we do have all the links. The computer's a tad slow today. I don't know why. Facebook, Twitter, subscribe to us at YouTube. So if you haven't done that, feel free to. We put up some bits and pieces pretty much across the board. It might be worthwhile. So here we go. That's just what I expected. This market is starting to roll. The ASX is unusually strong, which it keeps running into that resistance. You can see, we'll just have a look at it. XGO is, look, it's not looking that great at this stage. Friday had a bit of a sell-off, did bounce into the close and potentially looking weak. If you're bullish, you got to remember it doesn't matter what the fundamentals are saying. When things want to turn, they want to turn, because it's not about when you get to extended levels like the US is. A lot of markets are viewed as extended. They're dislocating from the fundamentals. That could keep going. Also, we've got record amounts of stimulus that are happy to buoy the market, have in the past. It doesn't mean it will keep going, because if you're sitting on profit, if you've been buying and you're sitting on good profit, sooner or later, you just simply run out of people to buy it, and anyone that's holding will start to think twice about holding and may want to start to lock in some gains. It's as simple as that. Okay, so when you're buying, if the ASX is down here and you're looking to buy, and you've got stimulus coming out, great. Fundamentals are rubbish. Stimulus comes in, bang, up she goes. Happens again. But sooner or later, it comes to the point where if the cracks start to appear, everyone's loaded long, and they could put out stimulus. The market doesn't react to it. Just be careful; it's going to react down. If it doesn't react up like it has in the past, it could be because the market's just running out of energy. It's running out of steam, and all markets run out of steam. All products run out of steam. Does not matter what your fundamentals are saying. Does not matter what your macro economics are saying. They will run out of steam sooner or later, and people will be forced to lock away some gains or get squeezed out. Now, that if everything's rosy, it could be a pullback, but if it's not rosy, it could be a sell-off. Okay, so this is the thing we've been trying to judge for a while, and I think looking at correlated markets is a must. We've spoken about this for a few days, so what we'll do, we'll just go over. I want to start here. I want to just start on the indices. Okay, so we've been looking at this kind of action. This is the Dow index on the Dow. So we've got this rising support, off the low. That was a big sell-off. Off the low, we've made it all the way back. Another low in here. So take your line across the lows. We've got this retracement back to this zone in here around 20, say it's 25 even, just to make it a bit easier. I think the other day when we spoke about it, it was sitting right on there, and we gapped up in the open because all the markets, the overnight markets, were strong. I think this was Friday. That was Friday, 12th. Yep, Friday. So the markets, bounced off here. The overnight futures markets, they bounced up. So when the market Dow was opening up, it pretty much gapped up in the open and sold straight down again. So that's not a good sign that it want to come back down and test support. And it seems to be potentially like it's testing that support, and anyone that's long may not want to hold it at the moment. I mean, we don't know. We'll wait and see what happens on the open tonight, whether it's starts to hold below this this level in here, which we'll keep an eye on. This level in here, it starts to grind up. What's going to happen over the next session? We're going to start to roll over. But if we start to edge through these lows and we start to get through them, I would be looking for a potential sell-off, and there's a lot of fuel on the way up to squeeze out. And don't forget, this is the kind of action on the upside, a big sell-off. When you start to grind back up and you run out of steam, I'll be looking for a lower high here. If we run out of steam, then it could come down real quick. Okay, not saying that's going to happen, but I'm just saying it's easy to say we're bullish, but you always got to protect the downside. Okay, and if it's bearish, you got to protect the upside. If you're selling all the time, you've got to protect yourself to the upside. So it's just managing your risk every day, trying to see what's happening. Do they all add up? The markets continue on. If it's strength in the Aussie dollar, that would mean strength in the equity markets, because the Aussie's been going quite strong. If there's weakness coming to that market, if there's weakness coming into gold, if there's weakness in oil, which there is at the moment, copper, all these correlated markets that have had a very good run on the back of this equity market rally, if they start to show some cracks, and the only ones that are left that's not starting to, I guess, crack or starting to look like that could be a sell-off is the equity markets. I think they're the last to react. Pretty much your professionals won't be sitting in the equity markets. Your professionals will be trading, say, your currencies. The bigger traders, your banks, trade copper, gold. These sorts of things can be traded. I don't want to say professionals, but there's a lot more mums and dads that play around in the equity market, and pretty much everyone wants to go long. So at this stage, that's what's happening. Look at the S&P. The S&P, this rise in support, same as on the Dow, but it has cracked. So which one are we going to, follow? I'm suggesting that Dow could be starting to crack as well. We might be sitting off support. It doesn't mean we're going to push through support, but it means be wary about continually going long, continually hitting the buy button. Okay, purely because there's so many buyers loaded up. Now, if you think that it's the same on the downside, when fear's greatest, it could be a good time to buy, and anyone that did buy, down here was rewarded. This was your prime zone to buy off that sell-off. This is all in hindsight. I don't think we bought in there. We've been buying a few bits and pieces on the way up, done all right. I think at the moment we've got a few that are struggling, only because I'm starting to see this market is potentially going to roll over. That's, like I said, we're just going to go over those correlated markets, so I might as well get into that. I was getting myself confused on what I want to say. Yep. So that's the S&P. I mean, look at NASDAQ, all-time highs, starting to back off. It's breaking that uptrend. What can happen from here? Are we just going to consolidate the expected? Does everyone expect it, if it's been going up for a while, to finally sort of break that downtrend, come below the previous all-time highs, which was from the sell-off, which is back here, come below and then just turn around and go straight back up into new all-time highs again? That's fine. I mean, if it starts to, what I expect with these sorts of breakdowns, it doesn't mean it's just going to, okay, now it's breaking the support line, you sell. Okay, you get into it. It could easily chop you around. Markets can go from an uptrend to sideways action, or a downtrend to sideways action, and consolidate the lows, consolidate the highs. They can chop around, be range bound for a while, and then start to roll over as less and less people want to hold long. More and more people are starting to close out, and vice versa. It's the same sort of on the downside. You start to break this downtrend. Let's just see when it happened. Start to break this downtrend. If you bought here, you've been squeezed out. So the first thing I'd be looking for is your first rally. What happens on your first rally from here? Are we going to pop up, start to get heavy, and then go down? That's what I'll be expecting to see. If we start to see that, we start to see some cracks appearing, you don't have to wait till it breaks through the lows. You can start to either reduce risk if it starts to edge lower from there, because you're anticipating that's going to be a key lower high, because you know that there's going to be bulls in there. The bulls are going to try to give it a lift again, but if all of a sudden you're getting the swing between bulls and buyers and sellers, there's no more buyers left up here to start to dive in. Only your latecomers, anyone that's had a good run, anyone that's just a natural bull into the market starts to buy into it and they run out of steam really quickly. That's going to trigger some selling. Does that all make sense? The way what I'm trying to explain, it's if you think of everything in terms of fuel for a move. When you're down here and the market's come off hard, it's the reverse. Market's been sold hard. We're looking for potentially how much fuel on the downside to sell is left in the market. Once we've had 1, 2, 3, or 4 legs lower, how much fuel is willing to get out to sell that's left in the market to continually push it down. So if you're looking to short it, if you were shorting up here, or say in here, prime example, you're shorting in here, great. It's your first sort of pullback. You sold into there, it's paid off handsomely. Now, if you started to sell into here, it's already well and truly extended. You've had your second leg down. You know that every person that's been trading is either they're watching it, and it's not unknown. We know the market's heading down. We know that it's getting sold off. So if you've either sold or you haven't, and you're willing just to close your eyes and hope for the best, but either way, there's a lack of selling pressure that starts to run out, or a lack of selling fuel that starts to run out, and it's the reverse. So you'd be looking for your break up here, your first pullback. What happens on your first pullback? Are we going to start to get sold off again? Or there's buyers starting to soak it up at a higher level? Okay, in we go long. It's just the same, but in the reverse. All these buyers have bought it up. So anyone, especially in the hang scene in NASDAQ, got into new all-time highs. That could be a big flush if you're looking at let's just look at a weekly. A big flush in your weekly. We popped up, rejected it. Are we going to start to find some weakness come in? And we've got a double top in play there. This is all the sort of things you've got to start to manage now. So I think as the markets get extended, we've got to manage that, what could be happening. All right, let's go over to the XJO. Now, to me, that's not looking too crash hot either. I haven't looked at that, just what happened on the open. Doesn't mean that we're going to sell off straight away from here. We could, from here grind up, retest, and then start to do this, or we could just do it at a higher level. Another grind up and then start to find some weakness. And these are all this, like I said, all the sorts of things we have to start planning ahead for. But if it just takes off from here and we're waiting to go long, but just this kind of sell-off from Friday, I feel that we've got a pullback due. Okay, I mean, it'd be interesting to see how the US reacts tonight. So that's the ASX. Let's look at, say, the correlated markets. Now, this is what I'm finding more interesting. I mean, indices can chop around, and indexes can chop around. So it's the correlated markets. We'll go over to the Aussie dollar. Now, the Aussie dollar is starting to back off. It's quite clear. We've got up to this high. If we start to go to a 4-hourly chart, you know, this resistance zone we've touched up here way back in July last year. Again, in January this year, before we got this massive sell-off, we just got smacked down. Now it's come all the way back up, retested, and started to fail. Okay, so there's definite cracks appearing on the Aussie. It's whether it extends lower, whether we start to find a bid, you know, what happens from here. And all these markets are starting to show a few signs. I mean, we just went through the S&P, the ASX, the Dow. They're starting to show a few cracks. The Aussie's starting to show a few cracks. If you go over to the dollar index, we spoke about this before, you know, dollar related, that trend down is starting to break. Doesn't mean we can't consolidate here, another lower high, and just extend. But it is a higher probability that potentially all these sellers in here are going to get squeezed out, or we're going to start to do some work around the support and start to hold up off support. Okay, so that I don't like the way the Aussie's starting to fade. Okay, I mean that's good for gold stocks, which we'll take a look at the moment in a minute. But I don't like the way that's starting to fade. The euro, which has been pretty much lockstep with the US dollar as well. The key level for me was this zone through here. I mean, it hasn't quite broken. That could be a washout. You don't know. But that move up, pull back, anchor to the trend up, move up, took out the highs, extended slightly, and then boom, we come down and we're broken out of this zone here. So this is what I'd be looking for. I don't really think it's just going to take off to the downside, but you know, if the equity markets start to roll tonight, then expect that to go as the US dollar rallies. I'm expecting more, you know, maybe something like this, bit of a squeeze. What it'll do is sucker in a few longs, and then we might get that sell-off we're looking for into euro. So I think there's a couple of opportunities coming potentially on the Aussie, the euro. The euro is more based around the US dollar, whereas the Aussie is a risk on. So if it's risk off into the Aussie, that would correlate to risk off into equities if they've got it right. And that's what I was saying before about, you know, your professional traders, potentially your professional FX traders. I'm not talking about your mums and dads that dive in left, right, and centre. I'm talking about the bigger boys with the bigger positions, you know, hedging through the Aussie equity markets or whatever they're doing, the carry trade, all that sort of stuff. So yeah, that's what I'll be looking on the currencies. The pound, again, it's finding some weakness too. You know, is there more to come? Do we start holding up here? Do we go back and retest these previous highs and then sell off hard? Who knows? But at the moment, they've been heading south. What else was I going to look at? Oil. This is what I sent out this morning on oil. We're going to have to make it a shorter term. We'll put it to the hourly. Now, I'm not too keen on oil holding up just at this stage, and it is starting to break down from the alert already. It's just whether we start to build a lower high. You know, we could build, it might pop up into the European session or through the European session to the US and then get smacked down, which tends to happen quite a lot. So again, correlated market to copper, what am I talking about? Crude oil. If that's showing weakness, you've got Aussie dollar starting to show weakness. All these correlated markets are starting to show weakness. There was weakness on the open on the equities, but it seems to be holding up okay. Where are they at the moment? It's going to kill me if it goes too much smaller, lower. Anyway, the Hang Seng's starting to break down. This is the 30 minutes. Go to the 5-minute on the SPY futures. You know, potentially that's starting to break down. We've got some resistance zone through 58.50. You know, if this goes through that low, if we consolidate here and start to roll over into the afternoon, that could be a bit of a sell-off. It just depends what the other markets do. In US is starting to find a bit of weakness. This could just hold up, could chop around, be range bound between support and resistance. It doesn't matter just yet. But if we start to break down, and then your first pullback is met with some selling as well, that's where I'd be more concerned that we're going to get a big sell-off tonight. But I mean, the markets, the futures market in the US is open down. It's a couple hundred points at the moment. And it's whether they can hold up and then they bounce through the European session. We find, you know, again, we just have to wait and see what happens for the US. They're the ones leading the action at the moment. Crude, yeah. So this is what I was looking at on crude. So this big rally, you've got consolidation through here, and we started to lift again, retested that high, pretty much at around 40, and we started to get weakness. Now that weakness has come in. We've come, it's a good test of this 34, 32 area, but are we going to hold up? Remember, inventories recently were more than expected, a lot more than expected. They were expecting to be weaker, but they come out better than expected, which means there's quite a bit of US inventory anyway. And don't forget they've been turning the taps off. OPEC have as well. So if they're turning the taps off with regards to production, and you still got these higher levels of inventories, is that going to pressure the market, or do they have to turn up production a bit more? Which I don't think they're going to want to do. They need this price and they want this price higher. So it'd be interesting to see how it goes. But I think this would be, if this is starting to show weakness to being a correlated market, what are we in for with equities? So this is all these sorts of things I've been watching, we've spoken about before. Just trying to get your head around what's happening with the global picture. Are we starting to find a bit of weakness? Is it, what is it saying? Kicking the can down the road? Is it starting to run out of, we'll run out of road, or what's going on at the moment? But I think there's some of the correlated markets not looking as great as what they could be if we should expect more upside. I mean, sooner or later, like I said, there's going to be some heat come out of these markets. So crude, if we can't hold up here at 34, we're heading down to 31. And then I think if we do start to head down to 31, I think the overall markets are going to get sold off, or they will be getting sold off at that stage. Now, the last thing I just want to look at before we open up to look at some different stocks is copper. Now, copper's starting to come under pressure as well. If we go into the longer term picture, this is the level where we're looking at previously. So we had the market. This is all your trade tensions. It was struggling, and then we got the big sell-off into the markets around March, and they just got slammed all the way back down to this support zone around 2. And it's lifted, like everything else, it's lifted. So correlated to equities, lifting back up. So it's lifted all the way back up and even flushed out that area at 62.50. Washed it out, which is fine. I mean, it's guys are going to wash it out. I would prefer to see if it was a strong market, it was going to retest that level and hold up above. But instead, you've got, I would classify this more as a washout at this stage. And if that's a washout, I'm expecting lower prices. Okay, only because of if we consolidate below this level, back below, then yeah, especially the way this market was strong, that flush, it was extended. It's dragging in more buyers as people see this as break of a key level. Your longer term traders, maybe your daily traders, break of a key level, jumping on the copper, and they turn around and being squeezed back out of the market, depending on where their stops are. That move there to me was just triggering some stops, some buy stops above the market. If it couldn't hold up, it's not a good sign of strength. Now the fact that it's pushed back down again, starting to chop around here. If we start to chop around below and consolidate, there could be another leg down. Okay, which could just take us down to 2.5, 2.9, and then start to hold up again like we've done many times in the past, or are we going to get slammed down like we did here? Okay, again, it's all got to do with your equity markets and what are they going to start to do. And if you're looking at correlated markets, I wouldn't want to be buying just yet. Okay, I wouldn't want to be buying again anyway, just at this stage, into shares anyway. I'll be wanting to see this pullback and see if it gets soaked up. And then if it starts to, this correlated market starts to lift again, great. The Aussie maybe flush down, we start to hold a higher low. Let's just look at this. If we got this kind of action, it might flush down from here, a good flush down, all your bears, clapping their hands, look at us, we're doing great. And then you start to lift from there, and we do this kind of action. That would lead me to believe that, okay, the move up is still intact and we're at least going to retest this high. It could be worth jumping in some good quality shares, some good quality setups. Remembering still in the back of your head that if this plays out, we're still extended. The market is still extended and the fundamentals are still hopeless. Bitcoin. Well, we'll look at that in a minute. You just reminded me. Thank you very much. All right, guys, so that's what I've just got my eye on with the correlated markets. I know we probably spoke about it before, but I just want to, a bit of a heads up today of what's happening. Like I said, the markets, look at the Dow. Where is the Dow? Dow futures. This is delayed, by the way. It's sold off. We're getting down to this support zone where we've traded before. What we're looking about here. Are we going to bounce off that zone, bounce back up, or are we going to find there's going to be more weakness? I mean, if this just flies straight through there tonight, I think we've got a bit of an issue, and we could be looking for another 1,000 points on the downside. Could be trading straight back down to 22, 23, just this zone down, this support zone down here, 850, say. If we go from there, what's that? Miles away. It's a couple of 1,000 points. So just bear that in mind. Things are not that. The fact that the Dow futures are starting to look like they're breaking. We've got all the other indices. You got the Aussie dollar starting to reverse. Everything that was going when things are looking good is starting to reverse. It's not playing into a bullish sentiment. All right. So what do you want to look at, guys? Put something in. Put it in the stream. Any questions on just what we're looking at there? Does it make sense? Think I'm talking rubbish? I'm happy with anything. Any comment, put it up there. So I just want to keep an eye on. So that short, I was looking at the Dow just before 12:30 is actually could have been going all right. So it's a bit of a shame, but it's coming back down to, look at this Dow down this zone through here. I'm probably going to stuff my chart up. So this is the area which, just because we're starting to get bearish, we're pushing into that zone, doesn't mean we are, heading south at this stage. We could bounce off that like we have 1, 2, 3. Could be the 4th time we bounce off. All right. CUV chart. Anything on opening gap reversals? What do you mean there, Lauren? Yeah. That was annoying. I think we just missed out, Colin, on that PLS. And that's, it was all looking great. Everything was great right up until we didn't take that partial. So it just missed out, which is a shame. I mean, it happens. I think our stock's going to be about break even. If we do get a sell-off, that'll probably get tagged. So be it. Let's get onto Bitcoin, and then we'll get into those stocks. We've got a few popping up now. TLX, I hate that too. Sorry, mate. It's not looking. That's why I'm a bit. The way that market reacted, it looks like anything that was sort of long got hit pretty hard, pretty quickly. It's quick to take some profits on them, and it's going to mean that it's going to be slow to get back in. What are we looking at? Let's just say look at Bitcoin. Bitcoin, I'm not a big fan of just at this stage. I think we've got a zone through 91, say 91.20. If you start to push down there, this longer term structure is looking a bit weak, or looking very weak, really. So if you're a crypto trader, and this goes right back to, if we go back to the daily, this downtrend. I mean, everyone likes to buy crypto. Sorry, I wouldn't say everyone likes to buy it, but anyone that likes it, it's like a stock. They're just bullish on it. They think it's the world's best thing. It's the next biggest thing. And if we get an equity market sell-off, crypto would do well. It doesn't necessarily mean that. It's price action is telling the story. At the moment, I don't like it on Bitcoin at the moment. We've got this downtrending I've been following for a while. So you've got the highs up here through just above 10,000, 10,300. Failed to get there recently. I don't call that as a good move. It's spiked up straight back down again. So this inside level is now holding at 99.30. And this trend up is starting to break. So are we going to consolidate sideways and then lift later on down the track, or are we going to roll over and this is a major swing high? Okay, so that's what I'm keeping an eye on just at this stage. Yeah, you're a tease, Lauren. Just saw that. So, yep, so Bitcoin. Don't like that. I think it matches up with Ethereum. Same downtrend, major swing high here potentially. If that's the case, we're going to get that rolling over. Ripple, it's right down on its knees at the moment, but it doesn't mean it can't go further. It's not showing too much bullish sentiment at the moment. This looks like it's ready to roll as well. Probably not as much as Bitcoin and Ethereum, but it's looking decidedly heavy for me at the moment. Alrighty, let's get into the fun stuff. After FMG. See, my computer's just running out of steam. Looking to sell. Doesn't look too bad. It's still problem with FMG. We'll just go back to a daily. There's a clear inside level on the daily that probably matches up to your. Let's just take a look. There's this little inside level that's probably touched on there, just above 14. So the trend is up. There's no reason why it can't, pull back. We might find that we're going to have to retest down to 12, so there could be a short on the cards. If this market starts to fall apart, yeah, definite short on the cards. But at the moment on the daily, not too bearish at this stage. It's very, it's like picking a top up here. If you get into the lower time frames, don't forget we are extended on the stochastics. Is volume coming off? It hasn't been that great, probably right from April, even though the market's pushed higher. So if we go down to the shorter term time frames, yeah, today is starting to look heavy, and that's probably that support zone around 14.20 thereabouts. So at this stage, I wouldn't want to be long. I'd be really tightening up my risk, but it still hasn't cracked down on the daily charts. So I think you've got sort of inside levels. This level 1480 holds, and we start to work our way down. MAs have started to roll on the 30-minute chart, but it still can easily hold up above 1430 or 1420. So just keep an eye on that. If we start to get a bit of a sell-off, I'll be looking for the first. I want to see essentially, the market push down, look what happens on the retest, and then potentially go short from there. I mean, you may not get the opportunity, and it's always harder to, it's a lot harder to sell into shares, to short shares, than it is, with the same sort of strategy that I'll be using on the upside, because generally shares just don't want to go down. Simple as that. And when they do, it's the proverbial hits the fan pretty quickly. You don't get much of a chance. It's harder to short them. There's not as much entry setup, or you've got to be quick. And when you're quick, taking those really risky setups, they could pay off, but more often than not, they don't. So if you try it a few times, you might just be making back some losses if you do get it right. So anyway, we'll see what happens there. I mean, we might get something like this, chopping around, sell off, consolidate, up we go again. So just be wary of that. CUV. It's looking heavy up here. I mean, not saying it could come down, but it's just, I don't see a setup at all. If the market's going to head south, I'm not sure Nick, yeah, he's a good trader, that bloke. Oh, Nick. He's a really good intraday. I mean, he takes some big risks, but he knows his stuff. For intraday, anyway. What do we got here? CUE. So we go back to, just want to check out this weekly. Now, weekly, a big flush lower. I like the big flush lower, and I have been watching CUV, but the problem is that weekly's gone from, a lot of pressure buying it into the overbought territory. You've got, longer term, we're still seeing volume come off as we're getting higher. Okay, volume's come off. Big soak up here. We pushed it back up. Maybe there's been some distribution up here through here of these buyers that bought it off the lows. They're getting a bit nervous, a bit skittish. Are we, is it too much for us to ask that it's going to go up? I don't like the fact that on Friday it's, open low. It did pop up, but the overall market popped up. So it's just people following the overall market. Now, I just want to show you. Again, it's, for me, to go long here, you need to get it into new highs. Simple as that. You don't want it to, we go long just in here and find we're going to run up to 24 and then straight back down again. It's only 20 cents gain. It's half of, I don't even know in percentage terms, it'd be next to nothing. And the fact that we've got this little zone through around 28, anything can happen. And the fact that it looks like it's starting to roll is not a good sign either. So if you want to, either way, if you want to go bullish on that, you're chopping around here, you want to see it pop up, see what happens in that first pullback, see if we can get an entry long. And again, I won't be going long if the overall market's selling off. I don't feel that's the right way to do it. So again, we're just going to come down if we start to get bullish in the overall market. So we have a bit of a pullback. This can hold that trend between 21 and 24. It can hold in here between support and resistance, and the overall market has a bit of a flush down and we start to get buoyed again. Then great, that could be one to set up when the market's starting to bounce back up again. But if it's not, it could just get easily sold off like it did, back here. Through February, it was probably getting sold off earlier, wasn't it? Started the trend down earlier. All right, what do we got? Oz, CV, PLS. PLS is back below 30. It's very. This is a very, very hard one because technically we're just sitting on top of the MAs. There is no reason why it can't rally up from here. On the daily anyway. And lithium, lithium's people love it, others hate it. I think lithium price has, the bubble potentially is burst, but it doesn't mean that it can't rally. Lithium prices can't lift, and we get another run up on lithium prices there. But this is the trend. I know we've tightened the stock right up, and that's because of my feelings that this market could get hit again, and I really do expect to get hit. I don't see how it can just keep going up. So that's why I'll be happier to tighten up the risk, even if we get stopped out about break even. I think roughly where it is now. Anyway, we're in at 27, 28. Probably stops around the same level, maybe half a cent leeway. If we get stopped out, I don't care. If we start to set up again from here, and I want to see, this move up, we've backed off. If we back off and we start to hold up here, it could be worth another buy, another entry. But again, it's got to do with the overall market. There's nothing wrong with staying on the safe side. If we do get stopped out and we have to have another go at it, doesn't matter. This trend up is still holding. We're sitting on top of the MAs here. There is every reason, and it's getting soaked up too, every reason why it could lift again from here, from where we are. And there's every reason if this market sells off, this will come off pretty quickly. So it's a bit of a shame that we didn't get a partial out on that, and we saw it reverse from, right up at 38 or 39. I think it touched on 39.5, and then we put the partial in around 39 or thereabouts, and it basically got sold off since. So we'll have to wait and see. Yeah, I don't know if you still got it, Colin, or you still got your eye on that. TLX, still hate it. The TLX, that's not the one we had. I'm on the wrong one. SXL, TLX is not doing too great. You've got TLX there. The problem with this one is a few things actually. You can probably tell by, when you're looking at the charts and you're getting a bit of uncertainty what could happen, it just, you're better off being out, to be honest. You've got the market's had a good run up, it's holding. When it failed to go through that high from here, failed to rally up, it got sold off. That also becomes a double top. The market's got pressured lower. So is that a deeper pullback? And we're going to come into a zone where people are happy to start buying again. Look at the stochastics have gone from overbought to oversold. So the selling pressure's coming in. If we get down to oversold, last time we're down there, we're lower, and we're starting to potentially hold a higher level, then yeah, it could start to rally again. We could get some more upside. But at this stage, I wouldn't be holding it. And I also wouldn't be buying it just yet off that daily chart. There's nothing to me that says it's a buy. There's potentially, we start to hold below these MAs and we start to, so this is the move. We've got one, that little pop up. So let me just go back. Clean all that up. Off the highs, we bounced up, pull back up to retest that level we sold off here. So that's the sort of price action we've got at the moment. If we start to chop below this zone, or we sort of chop around it, there could be some selling to come in. We start consolidating below, the MAs start to catch up, the MAs cross, market hasn't gone anywhere, so the buyers have started to lift it. It sort of goes back to, maybe overbought or around 50, 60% on the stochastics, but we're not actually going anywhere on price. That's going to lead me to believe there's more selling to come. All right, so this is what I'd be concerned about. The bullish side, I need to see an almighty rally back towards these highs So anyone that's short, been short in here, gets squeezed out. Don't forget when you know, in any sort of action, if you had a rally like that and you start to consolidate up near the top third of a trend, you know, if you're breaking that down, that's your rally. You start to consolidate the top third, that's a good sign. And it's exactly the same on the way down. If you've got bearish action and then you start to rally back up and you start to consolidate the bottom third of a move down, be concerned that we've got another leg down. Okay, but if you get something that rallies quite hard, there's a good chance we're going to do this and start to lift again. All right, so that's what we'll be looking for. So there's those two scenarios. Consolidate down below the bottom third, to me, is very weak. If we start to rally hard, we get a good spike up, and then we start to have a minor pullback, and that's getting soaked up in the way of little minor lower levels. It starts to get soaked up. I'll be more bullish on that. Okay, so at the moment, nothing's played out whatsoever, so we have to just keep an eye on that. TLX Oz. Still heading higher. I mean, on the daily, I think if there's going to be a collapse, that's, you know, and Aussie starts to rally, starts to drop, then Aussie gold should be supported, and you might find these can get supported. They're not looking too great at the moment. Gold's down 1.3%. It's actually one of the hardest hit today, apart from consumer discretionary, and you got consumer staples. So it's getting hit a bit today, even though Aussie gold is actually hanging up there. It's not looking too bad. So you go step back longer term. Anyone that missed to sell it there, if they're bearish on it, it's a prime time to start selling around $11, back up near these highs. You either minimize your losses or you're going to lock in a small gain. So that's the way I'm viewing Oz. You need to see gold start to rally, Aussie gold start to rally hard, for me anyway. But I wouldn't be buying, like I said, I wouldn't be buying up here. I think we're too stretched on the weekly. I need some buys to get flushed out. If we start to just have a look at what this daily is looking like. Yeah, it's not looking too crash hot. I think there's a lot of resistance up here. Big flush out here was rejected, and then the first time we come back up the tester zone, sold off, got walloped. Okay, is that going to happen again? I don't know. So don't. If there's a big sell-off, this is the biggest problem. Big sell-off, you should expect the US dollar to rally hard again. Now, if the US dollar rallies hard, you're going to get Aussie coming down, but it's also going to pressure gold. So gold in Aussie dollar terms, you got them both heading the same way, you know, which could be down, which could neutralize the actual any rally into gold. So, you know, although I say that I think gold could go, it's going to be dependent on what are we going to see? You know, Aussie gold, go. It's going to be dependent on what's triggering it to go. You know, if the Aussie US dollar is not moving much, it's going to support Aussie gold. But if it's US dollar based, there's going to be a US dollar rally, you know, into the safety of the US dollar because equity markets, everything's getting hit again. Then don't expect Aussie gold. So you could be diving into some gold shares because it's a safe haven, but they're not going anywhere, and they could even get sold off quite hard. Right, so that's my take on Aussie. I wouldn't be buying it up here, to be honest. I think we've seen the best of it. If you bought it through here, great. If you've got nice tight stop, great, and you're sitting on some gains, great. But if you're looking to buy, I'd be very, very tentative up here. I want to see something like this. I don't want to see, just buying intraday off one single candle. I'd rather see this sort of action. High levels start to hold like we have previously, and then go. So you want the rally. You want to see, that there's going to be selling. Like this rally, there's going to be selling. What's happening when they're selling? Buyers stepping in. So you're not the only one that thinks it's going up. You're getting this kind of action. So then you can buy into a rally, or you get this kind of action, just chop around and then bang, straight down again. Because now you've had one. If we just draw that in a different color, you've had this kind of action. I'll draw it yellow. Yellow stands out a lot better, doesn't it? I like yellow. There you go. 1, 2, 3. So you've had rally, consolidation, rally again. So you've had two legs up on Oz. So you're asking it to go through these highs at 11 when things are starting to potentially looking a bit sticky, is could be asking a lot. It's a low probability setup anyway. So I'm not sure what you've got on that one, Lauren. You long? Opening gap reversal on Friday. Yeah, I don't take much stock in that sort of stuff, to be honest. I don't really study much. I'm looking at price action where people happen to buy and sell them bits and pieces. What else we got? Oh, Z and O. You still got that, Lauren? Bloody, I was actually looking at that today. Look at the intraday. So if you're interested in this, look at that intraday move. Was it that? It was here, just in here. I was looking at that. I thought that could go. That could easily go again. And you couple that up, go to the half-an-hour chart, look at that grind down here, and all of a sudden you've got this little pop-up on the open. And that's where it was happening around 2:45. The action, I really should have alerted that, sorry. The problem is that sort of action intraday, it's not the way, at the moment we're running trade setup. It's more we want to make sure that longer term portfolios are safe, that they're not going to get hit out if the market takes a big turn. Trying to manage that rather than just do your intraday stuff. But that there, you got your channel, whatever you want to call it. Not a good sign for bears. Another not a good sign for bears. Another not a good sign. That, spike down in the open and then rally from the open, rally hard, consolidate, rally. It ended up quite well on the open for that session anyway. Next session, bit of a sell-off. Okay, rejected again at 220 or thereabouts on the open. That was Friday, and we got soaked up. So this move today, it's popped up. That was a cracker. So intraday, to me, that was a definite buy, and it's based around that 5-minute chart in this level here, because you can see grinding down. That's the pattern you love. Sitting on top of minor double bottom there and extend it up. So if you bought it somewhere around 245 off this price action here, that's great. Now it looks really nice. No, okay. Just look at the comments there. Does that make sense? So that was, God, it's still annoying, isn't it? I think we had this, I can't remember where, it just keeps producing the goods. It's like APT, just does not want to go down. Afterpay. What else have I got? PLS. I don't know. Zip. Not P. Yeah, these. I mean, that's holding up at those levels, isn't it? It's all, was it based around US growth, like Afterpay, growing into the US? To me, that's all good in theory, but I could not buy it up here. I could not risk that getting. You just imagine if the markets, we wake up one morning, prices up here above $6 on Zip, or 630. It's been consolidating around there. Just imagine waking up and seeing it down. We probably did on Friday. We saw it down. Market was down 1800, but I don't think it was ready to sell off. It was just, and that was a setup in my book. I don't know if anyone noticed the futures the day before. It was a trend day down. Okay, trended down. So anyone that's in the US has woken up and seen the market's all off and the overnight market's getting hammered. You know that there's going to be a gap down in the open, but it didn't look like it was. It looked weak, obviously, and that's trapped a fair few traders. Squeeze it back out of the market with that 1800 point down, and then we pop the next day. So that's why I don't think we saw a good disc get hit that hard. It's actually opened down below 6, bounced straight back up. But you can imagine tonight, after what we spoke about, the S&Ps potentially breaking down, the Dow's potentially breaking down. Imagine that at the start of a bit of a cascade lower, and you wake up in the morning and you find that you're above 6 and you just bought it above 6 looking for this market to go to the moon. I wouldn't expect it to go to the moon at all. I'd be very tentative about buying it up here. I just think there's too many people loaded long for whatever reason that they get fear, start driving the market. And don't forget, if you got gains, you tend to close them out last. But if the market starts to sell off quite hard, I think it'll eventually catch up, being at this higher level. If it's down here, down on its lows, that's fine. It could probably weather the storm. But when it's actually up on its highs after this severe gapping up, it's holding there. I know it's holding there. But if the market, like I said, starts to get hammered and things are starting to look like they're going to melt down, and we looked at, the Aussie's melting down, gold's not doing anything, copper's starting to fall over, your US dollar's rallying hard, and equity markets are selling off. Do you really want to hold that and not lock away your gains? I know, guarantee there'll be people that won't want to, and sooner or later that'll start cascading down because you wouldn't want to buy it up here. I wouldn't anyway. I wouldn't go near it, but I wouldn't want to short it either. It's not set up either way. Acquisition of quad pay in US, yeah, push prices higher. So when's that euphoria going to stop? Either way, I mean, if you've got it and you've got it from way down, $3, and you're looking at $6, you can afford to give it some leeway, but just realize where your stops are. What else? PLS, talked about that. Zip. What else we got? SXL. That's the one I hate. That stopped us out and it's holding there, but I don't. That was annoying. I think it was just at the wrong time, just when this market was extended and looking to get some heat out of the market. We bought it, looked okay, and I think we got set up on that one. Set up in the way that the entry was probably too aggressive. Am I on the right chart? So this is where we got in. Consolidation up here, that was great. Got in with this break through these highs at 25.5. I just wanted to get through those highs, get it clear, and that was it. It did not get up any higher. It just got stuck below this previous high at 27. Went sideways, and then you find some sellers coming in. So probably, in hindsight, could have got out a lot earlier, but we could have come down, hold above 22.5 or 22 and rally. But instead, the market, we had a massive sell-off, and we went stopped out on that big sell-off on Friday, from Thursday night in the US. So either way, I'm not looking to get back in this at the moment. I don't like the daily chart as much either. I think if we can consolidate around here, potentially, because longer term, it's been sold down pretty hard, hasn't it? But I'm not sure what's going to happen with Southern Cross, but if it goes back into lockdown, or I think they've had issues with capital, haven't they? Does anyone know more the fundamentals of me? But either way, it's been hit really hard, and I was expecting that good bounce in there, but we just got caught. What else we got? SXL, TLX got. So it was meant to be SXL. Yeah, we're out. We're stopped out. I don't like that action. I'd rather be out, just watching it for now to see what happens. There's no reason we could be looking sort of through just right where it is. If it starts to get soaked up, we start to get some volume come in, then yeah, it could still be a goer on the upside, but I don't think it will be if this market gets hit hard, and that's what I'm more concerned about than anything else. I'd rather some heat come out of the overall market and then start to flow into different good quality setups rather than just buying here, because some of these ones are still trending. They're quick to turn on the trend. They will be anyway if this market gets hit. What else we got? Oz. That's about it, isn't it? All right. So let's look at, is it XGD? Is that gold? Yep. Just wondering if this sector can hold above, say, 74, we chop around here, it could easily turn around and squeeze back up again. What's happening with the market at the moment? There we go. This is going to confuse a lot of people. I'd be inclined to see, I'm looking at the Dow now, that we're going to have a bit of a pop-up into the European Open and squeeze a few. There's a lot of shorts that have been building up on this at the moment, and look if we can get a bit of a short squeeze and pop up into the European Open and then see what happens, and then US. It'd be interesting to see what happens from there, but I don't think we're going to get a sell-off into the afternoon on the ASX. I think we're going to be chopping around between the bid and the offer, as in between 58 and 50, and we'll be supported around 58 at the moment. So we're only down, 12 points at the moment on the ASX? Sorry, 20 points. But we could, at the same token, that doesn't look too crash hot on the 30-minute chart. What's the 5-minute suggesting? It's flattened out on the 5-minute chart. 30s, 30s trending down at the moment was whether or not that was a blowout. We got support into the close. Are we going to hold above 58 and start to lift, potentially into the close, or lift back up to the highs, 58.50 thereabouts into the close in the ASX? The US is suggesting that it's holding up at this stage. From the open, it was weak. It's starting to hold up. So it could be a set up the bears and turn around and squeeze them back out. All right. So that's probably about it. Is there anything else quickly you just want to look at just before we call it a day? No, it's probably all good. Just keep myself organised. So you've got to view that. I mean, that big sell-off there on Friday, the way it's rejected and it went sideways into the close, not such a bad sign. It's not looking bullish yet. This is the 5-minute chart. Not looking bullish, but still not as bearish as what it could be. So look, we'll see. But either way, I've only got a couple of positions. Don't forget about this. SXL's closed. Got PLS and red. Red, I would have thought it's done better. That's still holding. Beta Goldie is holding at 27. So that's what I'm looking at. That thinking, not too crash hot. If gold's going to run, let's just look at some of these gold stocks. Don't worry about that. SAR, what's happening there? Potentially the same as XGD sector. That could be, if we can hold up here, we get a bit of a lift. That could be a goer. SBM, same. It's cleaned out a few of these buyers. If it's consolidating, this is the daily chart. So there's a half an hour above, daily chart below. If we consolidate above 3, there could be a lift if we can get up through 325, another extension higher. Northern Star, yeah, it's massive double top at the moment at around 15. Doesn't mean we can't. We need to hold a bid. We need to basically, for me, I want to see this hold above 13 and see any sort of selling pressure soaked up. It just means that there's buyers on the sidelines ready to go. What else have we got? That's pretty much it. Nothing else is looking too flash. Oh, what's that one? Newcrest. Newcrest for me is not too bad. I like, if anyone doesn't know, I like these moves. So you got sort of expansion higher, and you can see that there's shallow pullbacks and a good rally. And then you got 2 legs lower, which doesn't do too much, and you got a good rally, good expansion high, especially through mid-May. And you got 1, 2. The 2 legs have already come through, which has squeezed out a few of these buyers. Now we could be setting up, if we get a higher low in here, even a break up through 30.65, there could be another squeeze up, and we could be looking to some back up towards 38. So keep an eye on Newcrest. Someone remind me too, because I'll probably forget where I'm going. A lot of indice trading, because I think there's a lot of action happening there. That's about it. All right, guys. WAF. What's happening? WAF. Copper. Let's just quickly look at some copper. Sandfire. PNR. It's only a small one. It's not trading much, so it actually doesn't look too bad. AML. There's a smallie, don't worry about that. A lot of these wouldn't come on the radar for anyone, but just got them as an overall gist of what the market's doing in Western areas. IGO. Nothing's really standing out to me. Not looking too flash. Just another one while I'm here. What I do like, I'm keeping an eye on, for anyone that's interested, Andromeda. Like I said, I'm not a massive fundamental person. I don't know a hell of a lot about it, but apparently they're doing quite well, kicking some goals, and they've done well, heading massively in the right direction. The price is not reflecting it just at the moment, and I know there's a lot of talk around ADN. A lot of people do like it. If we can hold up around 5, I might be looking at just jumping into some of this. So I think that sell-off there, again, just remember when the market starts to sell off and you want to buy, the smartest thing to do is just stand aside because you can get it cheaper. It's pretty obvious when you start getting this market get hit. So that's why you can get this big flush lower. Someone's picked up some nice cheap shares there. Bounce back real quick, which is a good sign too. Not sure why I got hammered start of the month, but it could be anything. When you start getting up to the highs and you bought it in here, you might have doubled your money. Yeah, 3.5 up to 7, doubled your money. It's still worth locking away some. And then you start. So it'd be interesting to see whether we can hold up through 5 and start to lift. But definitely, if you're interested in that, look into the fundamentals of it. All right, guys. Thank you very much for joining me. We're back in for the longer stream back in Monday at 12:30 again, and we'll do just the usual Tuesday or Friday, just that morning stream, only for about 10 or 15 minutes, just to see what happens overnight. Because I think we've got to keep an eye on what's the overnight actions doing. Otherwise, you just don't want to get caught offside if you're not knowing what the overall market's doing. Whether it's buying into some stocks or tighten up your risk or whatever it may be. But we'll keep those streams going for now, and just the morning playbook, that is, and just go from there. All right, guys, thanks very much for joining me. Have a great day. All the best. We'll speak to you soon. Bye.